Hello, good evening, and a hearty welcome to Shine Projects. This is a market analysis video of 19th May 2022, and here we'll try to decode the global markets, charts and patterns, option chain analysis, open interest analysis, and we'll also try to do some cryptocurrency analysis. So, after understanding all this, you will have a better outlook on the Nifty as well as the Bank Nifty. So without wasting any further time, let's begin today's video and try to analyze how all these parameters have functioned in today's trading session. So let's quickly go into the stock futures to understand what is the position of stock futures, how they're faring at this point in time. So this is the stock futures data I have taken from investing.com, and mainly we will look at the US futures, all right, and the Asian markets as to how they are currently performing. So US futures, if you look at it, the market is down currently. Okay, we should wait and watch how the US market will perform in today's trading session. But however, at this point in time, to draw some conclusions to stay prepared to trade in Nifty and Bank Nifty in tomorrow's trading session, let's look at the things the way they are. So currently the US market, after falling a lot yesterday, even the futures are showing a negative trend today. And if US market falls down, naturally the Asian markets are also in the deep red. All right, Asian markets mostly, including Singapore, Hong Kong, and the European markets are also in the red. So what I'll be marking in my Excel is I'll be marking a red color to the stock futures. All right. Now we'll go to the analysis of commodities. We'll try to understand how the commodities are performing at this point in time. Okay, so once again, I have picked up the commodities data from the investing.com. In the commodities, mainly we will be looking at gold and silver, number one, and Brent oil, number two, and in general, all the other commodities also. All right, so gold is going up and silver is going up. All right, gold and silver going up is a negative to the stock markets. All right, so the gold plays a inverse relationship with the stock market, so this is also a negative. And crude oil, is above 100 US dollars per barrel, which is also very negative when it comes to correlation between Brent and the US Indian stock markets. So that way, considering the gold, silver, and Brent oil, it's definitely a negative factor to Indian stock markets. And looking at various other commodities also, we can draw a conclusion, okay, that the commodities are slightly bullish. When the commodities are bullish, it is negative impact to the stock market. For example, aluminium is on the higher side, and zinc is on the higher side. Okay, and of course nickel and lead are nearly zero, so these should not be considered. So commodities being on the higher side is a negative impact for the stock market, as it plays a inverse relationship. So what I'm doing here is to go back to my Excel and I'm marking the commodities as red. Okay, commodities are green, but I'm trying to relate to stock market here. Commodities being in green is a negative to stock market. That is what I mean when I'm putting a red color here. The next factor that we'll be looking at is the currencies data. So let me open the currencies data that I picked up from the investing.com. So here is the list of currencies. In the currency pairs, mainly we will be looking at USD INR and the dollar index. So how is the USD INR performing? USD is weak. Okay, there's a small weakness that is seen in the USD INR pair, and also dollar index is on the weaker side, which means the dollar is weakening. All right, and currency and stock markets usually play a direct correlation, which means rupee strengthening in short term is a positive for the stock markets. All right, so here I'm going back to my Excel to mark green in the Excel because the rupee is strengthening. Of course, the rupee has weakened, but this is a daily analysis video, so let's take the way it is. I mean, whatever is happening in today's trading session. Although the rupee has fallen down, so there is a slight uptick, but I hope you understand what I'm saying. All right, the next factor that we'll be looking at is the bond yields. Let me take out the bond yields data now. So these are this is the bond yields data. So mainly we will be looking at the 10-year treasury yield of India, okay, which is on the top here. And we will also be looking at the 10-year treasury yield of the United States. All right. So please focus on this. 10-year treasury yield of India is on the downward trend, and the 10-year treasury yield of the US is also on the negative trend. Usually the bond yields and stock markets have an inverse correlation, which means if the bond yields are falling down, it is a positive for the stock market, right? So that way, what I'm doing here is to go back to my Excel sheet, and in the bond yields, I'm marking green color because it's a positive for the stock markets, okay? And decoding the news, you know what is happening is inflation fears, everybody knows, okay? And then war is happening in the Europe, so the situation is not good, okay? And what else are the factors? So all these factors such as war and inflation and interest rates that are going up, okay? Interest rates going up, all these are negative sentiment to the stock market. So whatever is the news flow that is coming in, there's nothing positive about any news flow either from global stock markets or from the Indian stock markets. Okay, the Central Bank of India has also raised rates. The global central banks are also raising rates. So all that is a negative to the stock market. So I'm marking the red color here. Okay, so the next thing that we will do is to analyze the charts and patterns of Nifty and Bank Nifty. All right, so this is the Nifty chart that you're able to see on your screen. So I put various technical tools here. Whatever candlesticks that you're seeing here are volume candlesticks. So this is 1 hour data. This is the today's trading whatever candles that have been formed. So clearly you can see a negative trend. Okay, not even one green color candle I can see in the today's trading session. So this is 19th trading session. We'll pay a lot of importance to today's trade. We will also give a general oversight, general overview of whatever happened from the last 5 days. All right. So looking at the trend, this candlestick patterns in itself is called 3 black rows. Okay, this is a bearish candlestick pattern, and you can also see that the volume candles are huge in size. Okay, fat volume candles, whenever they occur, it means that the shorting is happening with a huge volume, right? So that way candlesticks are indicating a negative trend. The second thing that I want everybody to observe is this is the VWAP line. Whatever line that you're seeing here is VWAP, volume weighted average price. So if the candle breaks VWAP and decisively close below VWAP, it definitely indicates a negative trend. Okay, and this is the super trend. Whatever line you're seeing here is the super trend line, and super trend became bullish. Okay, pink color, whatever I'm denoting, is for bullish, and blue color is for bearish. So super trend has also started to become on the bearish side. Okay, and whatever ranges that you're seeing here is Bollinger Bands, but there is nothing to infer within the Bollinger Bands in today's graph. In yesterday's graph, there was something that you can observe in Bollinger Bands because there is a squeeze that has been observed here. Okay, it means that if these candles are touching the upper range of the Bollinger Bands, there is a likelihood that the market can fall down. But we are not looking at yesterday's data. Of course, we are paying more attention on today's data, which is recorded here. Right, and also the second parameter that I want everybody to understand is about the moving average convergence divergence. This is MACD. So MACD crossover also took place here. All right, so the black line is cutting the red line very decisively with a big angle, which also means that it is a bearish trend or a negative trend. Okay, and this is the third parameter that I want you to look at is the stochastics, and stochastics going below 20 is ultra bearish, and the stochastics are at 1.75, very extremely bearish. right? And the next one is the relative strength index. When the relative strength index also falls down below 40, it means that the markets are very weak, a very weak shape. All right. And the next one is money flow index. Okay, the money flow index being below 40 also it means that the money is flowing out of the security. What is the security that we are analyzing currently? We are looking at May futures in Kite app, which is from Zerodha. We're looking at May futures by inputting all these parameters. So money flow being less than 40 also is very negative. All right. And the open interest, looking at the open interest data, the open interest slightly showing the higher trend. Okay, and this can also mean that the negative contracts are being added more so. Okay, so that is an uptick in open interest. We have to consider looking at open interest data to understand more details about this. So if I have to conclude the Nifty chart, it is a negative trend overall in all the parameters whatever I have analyzed so far. Okay, so I'll quickly go back to my Excel, and Nifty I'm marking it as a red color. Right. And looking at the Bank Nifty here very quickly. So in Bank Nifty also, what I was able to observe is that the candlesticks, there is a 3 black crow pattern that has formed here, which is a bearish candlestick pattern. Okay, although there are 2 candles which has formed on the towards the last 2 hours. Okay, yeah, we will analyze that. But look at this. This is the VWAP, and all the candles whatever are trading are below the VWAP, which signifies the weakness. Okay, the super trend also has become negative. Okay, and is there any observation in the Bollinger Bands? Yes, when there is this candlestick wicks, okay, that are touching the lower end of the Bollinger Bands, it means that a small recovery can be due. It is not a guarantee. You never know until how long there will be such a wicks of candlesticks touching this Bollinger Band. But however, because it has touched here and we could see some recovery, Bank Nifty is not all that bearish as yet. Okay, and here the MACD crossover took place, which is definitely a negative. Okay, and the stochastic oscillators are also a range of 2 is making me laugh because it's a very bearish. Anything below 20 is extremely bearish, and RSI also below 40 indicates a weakness. Okay, and the next one is money flow, and money is flowing out of the security. Which one is the security that we're looking at? We're looking at Bank Nifty May future. Okay, and then we are also looking at the open interest. The open interest, there's not too much of a uptick or downtick like Nifty. Okay, open interest, you can look at it as a being something of a flat nature, so there is no conclusion that can be made from the open interest. So all in all, I understand that the Bank Nifty also is on the negative trend only, except for these last 2 candles, okay, which have shown some uptick. Otherwise, the Bank Nifty also is looking bearish to me. Okay, neutral to bearish, I must say, considering the last 2 green signals and these candlesticks that are touching the Bollinger Band. But however, overall, because it is bearish, looking at stock. So now let's come to the option chain analysis. In option chain analysis, let's look at Nifty option chain analysis. So I open Nifty option chain analysis for the next week series for the month of May. Okay, and 15,800 being in the money. Let's look at what is happening in the Nifty option chain. So I can see a clear support here because put writers are at 79,000 contracts here at 15,800, and after that I can see that there is a significant support that is built at 15,500. Okay, and here 38,000, 41,000. So this is a comparative analysis. We have to look at what the call writers are doing and what the put writers are doing to understand how the option chain is built. So let's look at the call writing that took place, and there is a resistance here at there's an immediate resistance here at 15,800. Okay, before going to 15,900 at all, there is an immediate resistance at 15,800. Okay, but because the put writing is dominating the call writers, so it is slightly on the bullish side. Okay, and the next point that I want you to look at is a 15,900 and 15,900 has 43,000 contracts. Because today there was an expiry. Looking at the next week's closing, I mean, option chain data doesn't make too much of sense, because we have to wait for the data to develop. But from whatever we can infer, let's make a conclusion. Okay, and the next one I'm looking at is at 16,000 level, and call rating is intense, at the 16,000 level. So what is your observation? Looking at put writing and call writing, I can clearly observe, okay, that 1 lakh is a bigger number when you compare with this. So it's a comparative analysis. Are the call writers on the higher side, or the put writers on the higher side, closer to whatever is the current level of Nifty? That is what we are trying to look at. Okay, so here I can see 95,000 call writers being at 95,000, and here it is 36,000. Okay, and the next nearest is 43,000. I'm so sorry. Next nearest is 43,000 when it comes to call writing. When it comes to put writing, it is 41,000. So call writers are slightly on the higher side. Okay, and when it comes to in the money, it is mostly on the equal side, but the bias is more on the put writing. So there is a support that I can see at 15,800 level. But all in all, looking at call writing data for the next week's expiry, I can see that there are more call writers than the put writers, at least from the near immediate in the money option chain. Okay, so this is for Nifty. So what I'm doing here is to mark red. Okay, although it is looking like a neutral to bearish data, so I have marked red anyways, because it is bearish. Okay, now looking at the bank Nifty looking at the option chain of bank Nifty, I should be putting 26th May, next week's expiry for bank Nifty here, and let us analyze what is happening 3 to 4 levels from in the money. So this being in the money, let us analyze, okay, what are the put writers saying? Okay, there is a put writing here, which means the 33,000 is a support level. Okay, and after that I cannot see any support being built, except for there's a slight amount of support here and here also, which is 32,500. So 33,000 and 32,500, there is support that is built. But when I look at the resistance, okay, let us also analyze the resistance level here. Okay, there is a resistance built at 33,500, although here the support is less. Okay, and the next level, which is I can see, let me scroll down a little bit. When I scroll down a little bit, I can see there's a huge resistance that is built at which level? At 34,400 level. Okay, so what can I conclude from the option chain data analysis? Deviation from the in the money. Okay, here and here I can see some significant contracts, and here and okay, this is not observed, but yeah, we have looked at that. So looking at the contracts that I can see, okay, from wherever the current bank Nifty is not looking all the that bearish, because of the support that is built, especially at 33,000 level. Okay, and whatever is the options that have been written from the put writers here. Okay, so bank Nifty, when it comes to next week's option chain, is slightly on the bullish side, I must say. Okay, slightly on what side? Slightly on the bullish side. All right, next the last one is about the open interest analysis. Okay, so here let's take out the open interest analysis photo, from which we'll try to understand what is the open interest. So there is no point here looking at what happened in today's session, because however today is weekly expiry. Okay, and this does not make any sense for today. Okay, and now coming back to what are the net positions, we are interested in looking at the net positions. Let me pick up yellow color. Let us look at the net positions that have been built to analyze the Nifty and Bank Nifty. Okay, so let us analyze the futures first. Okay, here are the futures data. So the retail clients are very bullish, okay, which is a negative sign. Okay, FIIs are bearish and proprietary traders are neutral in terms of the May futures. Okay, and the next thing is about calls. Okay, let's look at what the call data is saying, net positions with regards to the call data. Okay, and retail people are bullish, which is a negative. Okay, and FIIs are also holding bullish contracts, but in consideration with whatever is the put data, which we will go through, this is slightly on the lower side. So looking at the proprietary traders data, this looks very scary because this is not even, we're not even in the mid coming to the next week's expiry. Already they have built a lot of short position into the call shorts they've built. So whatever call shorts we have seen in the Nifty and Bank Nifty, looks like the proprietary trading desks have written all those calls. Okay, and coming to the put data, of course the retailers being so bullish is a negative sign, okay, when it comes to the put data, and FIs are holding a huge put position. Okay, FIs are in a huge put buy, which is a negative, and proprietary trading desks are in the neutral with a very less digit. So whatever put writing that we have seen in the previous slide, all those puts have been written by retailers, which is making it even more dangerous, this particular data. And we are currently not looking at stocks. As we go along, we will try to include stocks data also in this analysis video, but here let us go back to my Excel, because we are only interested in looking at Nifty Bank Nifty data. So option chain analysis, whatever we have observed, is also on very, very bearish note as per whatever analysis we have made. Okay, so what is the conclusion here? Because there is more of a red. Okay, so in the tomorrow's trading session, we will be looking at bearish trades only. We will not be looking at any bullish trade, no matter even if the Nifty is opening in green, even if there is a gap up, okay, whatever it is. So we'll follow the discipline of being a bearish on the bearish side. So let's be a bear for tomorrow. Okay, so how will you be bearish? Okay, so futures you can short. Okay, futures can be shorted. Future spelling is wrong. Shorting the future can be done, and buying puts also can be done. And so what kind of futures I have to short and what kind of puts I have to buy is the next question. So this month's futures can be shorted, aram se. I'm not looking at next month's futures because there is still 1 week that is left, and this May month's future can be shorted, May month. Okay, and buying puts, I always recommend put buying has to be done, okay, deep in the money. Even if it's on the bullish side, usually what is the recommendation is to buy the calls deep in the money. Okay, many retail people make this mistake of being putting money in out of the money puts. Okay, even if there is a huge fluctuation, 1 day fluctuation, those options will become worthless. So all I'm telling you is, if Nifty is at 15,809 Nifty spot, so we are looking at put buying, okay, being 300 points at least away from the spot price. So we're looking at 16,100 put buy, okay, or 16,200 put buy, or looking at 16,300 put buy. I know the premium will be high for the deep out of the money put options, but however, your quantity has to be less. It is not that we have to take risk by going closer into the in the money. That is very risky when you want to be on the buy side. And the reason we are discussing only about option buying and futures buying and not option selling is because most of the retail people who are the audience for our YouTube, they want to purchase puts, although I prefer selling calls and selling puts. Okay, but however, because most of us want to participate in buying of calls and puts, so I'm giving you a analysis for buying the puts or futures. Okay, so all this is about stock market. Let's quickly look at cryptocurrencies also. Okay, so cryptocurrency, although we will add more cryptocurrencies as we go along, if you're all liking these videos, but let us currently confine to the analysis of Bitcoin, because the Bitcoin is master of all the cryptocurrencies, and all the other cryptocurrencies, they usually take direction from the Bitcoin. Okay, so now what are the factors that contribute to changes in Bitcoin? Okay, so we're definitely going to look at the charts of Bitcoin to understand where it is progressing. Okay, and we will also look at Nasdaq. Okay, because Bitcoin is something to do with internet, Bitcoin or in general cryptocurrency. So they behave much like Nasdaq stocks, which means they represent Nasdaq, which represents the general movement of IT stocks that are there in the US. Usually, Bitcoin takes cues from the Nasdaq. Okay, so let's analyze these both things, such as the charts of Bitcoin and also the Nasdaq. So I'm going to the WazirX platform. Okay, and to show you how the Bitcoin is currently performing. Okay, so please look at the Bitcoin data. The Bitcoin is very bullish, especially when it comes to candlesticks. Currently, this is called three white soldiers pattern, as it comes with candlesticks. Okay, and then in the Bollinger Bands also we can observe a Bollinger squeeze that is occurring. Okay, whenever there is a squeeze, it means that it is very bullish, and it also means that the trend can reverse from here. You have to be cautious, but will the trend get reversed in the next 1 hour candle? I don't know. Or in the next 1 hour candle? I don't know. Or in the next 1 hour candle? I don't know. But you should be cautious about the reversal. But yeah, in general, it is showing a bullish trend. Okay, and here I've highlighted the MACD, and the MACD crossover also took place with a good angle. Okay, which is also indicating a bullishness. Okay, and then here this is about MFI, money flow index. Okay, and what is money flow index currently showing you? Just a second, let me maximize. So the money flow index is showing you that the money is flowing into the Bitcoin. Okay, there's a significant uptick in the MFI, money flow index. And the last one is about RSI. Okay, RSI is also above 60, which indicates a bullish momentum within the Bitcoin. So what I'm doing here is charts for Bitcoin are definitely looking bullish on all the fronts as we are speaking at this point in time. Okay, and also we have analyzed Nasdaq a while ago, and in the charts, let me pick up the Nasdaq chart for you. Okay, as to what is the current position of Nasdaq. Okay, so Nasdaq is on the lower side. Okay, Nasdaq is not performing well for quite some time, and today also it is on the lower side. Okay, so Bitcoin is giving you a mixed signal. Charts are good, Nasdaq is bad, so you have to hold on. Okay, you should not be trading in Bitcoin, especially if you are believing that it depends on both charts and Nasdaq. So because Nasdaq is negative, charts are positive, so you have to slightly wait before taking any positions in the Bitcoin. So Bitcoin is a let go for the day. Okay, so I hope you all have enjoyed the stock market Nifty Bank Nifty analysis and the cryptocurrency analysis data. So I'll make my best attempt to bring out such video between 8 p.m. to 10 p.m. because we have to wait for a lot of data points to come in. Otherwise, I'm very interested in giving you the data as early as possible. But yes, so between 8 p.m. to 10 p.m., we'll make our best attempt to give you this daily market analysis data. Thanks a lot for watching. Please smash the like button and subscribe to our YouTube channel if you have liked our daily market analysis. And disclaimer, this is not buy or sell calls that I gave you. This is purely from the analysis standpoint. We are an online education company. We want to pass on the analysis related videos to all our customers. Thanks a lot for watching. See you tomorrow.